whenever there's unusual profitability like there must be at the moment for you, there will be others stepping in. So that's, I think we should assume.
I mean, it's good that more and more are stepping in, but I spoke before about the huge gap. And I think even with the insurance companies coming into, I think this gap cannot be closed, this refinancing gap. And once again, they will only concentrate on really on good and core product.
Like you.
But like us, yeah. No, clearly. I mean, this brings really, I mean, if you're talking about a refinancing need of 500 billion, how much of this is really just the core product? Let's assume in the best it's 30-40%, which is probably very high here. What about the rest? And that's coming back to your question, as long as the rest is still troubled and is still open, here, and you still have the situation extend and pretend, which I think is also now coming to a point where you will see changes in the bank's behavior here. There is a huge problem. This will continue for the next 2 to 3 years. I mean, I'm happy, if it's a shorter period. But I mean, when we had the crisis in 2008, we thought, okay, 2009 it's over. And when we thought in 2010 it's over, we learned it's not even over in 2011. And we are still, when you hear that at the moment they are discussing this to increase this fund to 700, 800 billion, this ESPF or ESFF, what is called here. I mean, it's crazy. We are talking about, again, without any need of increasing it to an uncredible amount. And I mean, if you speak about the Germans at the moment, we feel that this is something which is now getting completely out of control. And our politics is agreeing on that. But believe me, the people are not agreeing on that at all. Here. And this is also something where you see the governments are doing something where the people are thinking, okay, we should probably go the other direction. Here. And as long as you have such kind of situations here, no bank will return to normality. And when you hear the word Greece at the moment in most of the German banks, come on. Here, the banks lost a hell lot of money on that. Not only in Germany, of course, but...
Okay. Finally, Jan, how do you feel when you hear about possibly insurers coming into the market or working through funds? Is that obviously you would welcome that, but have you seen any of that so far?
Not at this stage for the moment. I think that they are looking for something else, but for the moment, it will be in the future. But for the moment, what is our daily jobs? Mainly we have the demand and the look for the potential buyer and for how we can extend, how we can refurbish. And it's more and more technical jobs. And this big deal or this new, I will say, to be honest, I am too far from.
But I
it's
think
too far.
In general, it's not happening yet. The good thing about CE, it's so easily predictable because it always happens 6 or 9 months after London. So therefore, I think it's starting here in London now, and therefore it will take some time to move east.
But do you really expect, UK insurers, German insurers to offer loans in CE?
And maybe not directly. They use banks like you or other banks who don't have anything to do anymore, use their workforce and subcontract that to them. Why not?
No, for me, it's a challenge for the banks, clearly, here, but I'm not afraid at all. Because once again, the banks are in this business now for years. They made their mistakes. They learn from the mistakes. These are new funds, This is completely new, also with the investors' background, expecting higher IRRs and all those things here. And for me, the question later is, can they compete with the banks on the IRR? Here. The second question is, do they really have the experience and knowledge to invest the money? And what is going to happen if such kind of fund, will suffer the first loss on any kind of investment they will have here? Banks are used to suffering a lot here. How will the funds really react to that here? And how can they really, do the management on the daily basis? Because, I'm being a banker, I know how difficult it is. It's not that you go to Jan and say, okay, here's your 100 million, he gives me the interest, and then we speak again in 5 or 8 years' time. That's clearly not the case anymore. Here, you have to do all the DSCR, LTV covenant tests, you have to do the annual statements analysis, all this stuff, which is a lot of administration behind, which is typically not seen by the borrowers.